And we're going to draw for you some parallels between them as well as this current interest rate rises. This would then put you in a good position to make a decision whether you think you should be getting on the REIT bandwagon even before interest rates peak, which could possibly be next year or later part this year. So as usual, enjoy and like our video and subscribe to become our valued subscriber. The Edge magazine says that how interest rates rises are hurting S-REITs. First and foremost, do S-REITs necessarily get hurt during interest rate increases? And what should be a smart investor be positioning and be aware of if indeed REITs basically actually take a tumble because of rising interest rates? Now, ladies and gentlemen, if you look at the last interest rate cycle, this component index for all the REITs listed in the period from 2015 to 2017. As a matter of fact, there were 26 REITs that went through the last interest rate cycle from 17th of December 2015 to 20th of December 2018. Now, as like this particular correction, you notice that REITs or S-REITs actually corrected 17%, before the onset of the first rate increase that was actually in December of 2005. And surprisingly, ladies and gentlemen, for the next 2 years thereafter, that is actually throughout the whole of 2016 and the whole of 2017, the REITs have actually increased. The actual correction came only when the Fed increased interest rates 3 times in 2017 and 4 times in the year 2018. And that's why you see there were 4 mini corrections, and the cumulative correction for 2018 was only a fall of 12.8% when the index fell from 874 to 762. Thereafter, ladies and gentlemen, you notice that the REIT index surged by as much as 27% through the whole of 2019 and up to 32%. That is actually in the months of January, February 2020. Each of the 26 REITs performed during the upcycle. What commonalities do you see that existed in the last rate cycle that provide useful lessons for you as the smart investor that you can use in positioning and knowing when to actually reposition back in S-REITs in a big way? As you know, ladies and gentlemen, at GCP Global, we actually advocate taking big positions, knowing when your risk is actually minimal to actually be making big money in REITs. As you notice in our book, Making Your Millions in REITs in English or Making Your Millions in REITs in Mandarin. This is actually published in China as well as actually in the US, so you can get a copy of that. You notice that during the period of 17 December 2015, when the first rate increases started in the last rate cycle, right up to the last one. Now, just as a matter of fact, there were 9 rate increases between 2015 to 2018 over a period of 3 years. So if I actually encapsulated each of the 26 REITs that went through this last rate cycle, let's look at how their performance has been. So if you look, ladies and gentlemen, at the first chart, we have 9, okay? And surprise, surprise, 7 out of the 9 REITs actually posted positive return, even if you have bought the REIT on the day when interest rates was actually increased, right up to the last date in which the interest rate stopped increasing. That means when the interest rates rose from 0 to 0.25% to 2.25%. You'd be surprised that some of them, like essentially Capo REIT, posted a return of 29%. CDL Hotel Trust actually posted a gain of 21%. Let's look further. This is the next 1, 2, 3, 4, 5, 6, 7 REITs. So if you know how to pick which are the REITs and which are the ingredients for each of the REITs, as well as to avoid the bad apples. There you have 1, 2, 3, 4, 5, 6, 7, 8. So remember, out of the last chart of the 8 REITs, 5 of them showed positive returns when interest rates actually increase in the last rate cycle between 2015 and 2018. Notably, ladies and gentlemen, the likes of Mapletree Industrial Trust actually went up by as much as 25%. Okay, and Capital DC REIT went from 97 cents to 1.355, or a gain of 40%. So once again, ladies and gentlemen, hope you have a better understanding now. So if you actually calculate all that we have mentioned in the last rate cycle of the 26 REITs that were listed then, which went through the interest rate cycle from 2015, 2018, out of the 26, 14 out of 26 actually posted positive returns, in the course of the last interest rate cycle. So who says that when the interest rates increases, REITs will suffer as well? So essentially, for more on REITs and real estate investment trusts, and to how to position in this current, and whether the interest rates actually have already peaked in this current upcycle, to join us for our class this Saturday. Or if not, way in the next class, the 26th of November, where we actually have the fortune of having OUE coming in as our venue sponsor. We are very thankful to Dr. Stephen Riadi as Mr. Imam Riadi for actually providing us the Hilton Hotel to use as our venue